This video is sponsored by Toggle.
Whether it's early retirement at 35 that's your goal or a more traditional path into your early 60s, the information I'll share today can help anyone retire with a bunch of tax-free income. 6 figures worth. Who doesn't want full control over their time while they're still young and healthy enough to enjoy it? This isn't some crazy loophole or sketchy offshore business you need to start to funnel income through. It's simple enough for the average person to set up on their own without even hiring a professional. Let's talk about what most people are doing to set themselves up for retirement, how income taxes work in retirement, and how to get yourself a 6-figure paycheck every year after you retire that's totally free of taxes. All the money is yours. First, what most people are doing to set themselves up for retirement. And the answer is not a lot, actually. But you aren't most people because you're here. Typically, Americans have not been the best savers, but we snapped out of that for a minute in 2020 when the whole world basically shut down. As you can see in this chart, a normal person in the early 2000s saved about 5% of the money they made. After the financial crisis in 2008 and 9, it peaked for a while, and in 2012, at almost 10%, we were doing pretty well. It hovered around that kind of general area until we encountered the dumpster fire that was 2020. People were really unsure about the future, about their jobs, and as a result saved over double what they had been. And it got really crazy and spiked in April of 2020 when people were basically hoarding every dollar that they could and saved over 30%. That's pretty wild. This is probably wise. We should be saving. 30% is obviously not sustainable, but we can stand to improve, especially when 4 out of 10 people who are polled won't be able to pay for a $400 expense from their savings. Savings is like a kitchen fire extinguisher, small, mobile, and able to help out when something quick and unexpected flares up. But here's the problem with saving. It's not going to help you build significant wealth. It's not going to set you up for retirement well, let alone give you $100K per year tax-free. Savings only ever really grows when you add to it. We need a different strategy. Well, some people do invest for retirement. One way specifically is through a dedicated retirement account that's sponsored by an employer called the 401k. You've probably heard of it. I just ran a 50K ultramarathon last December, my first ever, and it felt pretty terrible. So I can't imagine running another 351K. Okay, bad dad jokes. Only about 32% of working people right now are using a 401k despite the benefits. You save some money on taxes in the year that you actually invest the money. And most of the time, it also comes with an employer match, which is just free money. I mean, it's like getting a 100% return right off the bat, which is nuts. It's incredible. Of the people that are using them, the average balance of the 401k typically just rises with age. Here's a chart in case you want to see the actual numbers. It looks to me like a lot of people are using the 401k for all their retirement savings, because here's the average amounts that Americans have saved for retirement total overall, not just in the 401k. Don't get me wrong. 401k is a great vehicle, but it's not going to get you $100K in tax-free income in retirement. The way it's structured is to save you money on taxes today. You'll instead pay taxes on the withdrawals you take in retirement. So you're delaying the tax time, basically. If people had enough money saved to get $100K in total income from their investments each year, they would actually have to withdraw quite a bit more than that to amount to $100K after taxes, like if you wanted $100K take home. So now that we've said the T word, the tax word, let's talk about taxes in retirement. Well, by and large, they work pretty much the same as they do now when we aren't retired. There's not like a massive difference. For starters, you don't get special tax treatment just because you're retired. Like, congratulations, you're not working, now you don't pay tax anymore? No, it's not like that, unfortunately. Income is still income, and that's still subject to being taxed. There are a number of different retirement accounts that will allow you to access the money that you've invested without a penalty once you reach a certain age. And those are ages just set by the government. So it's not like it has anything to do with the amount of money in the account or when you're ready to retire. Those limits and penalties are set up by the government. They say, now you're old enough, now you can take it out. Wait, Brendan, are you inferring that since we're taxed the same ways now, or basically when we're retired, that I could have $100K or more of tax-free income now? Not when I'm at like retirement age set by the government? Yes. If you save and invest hard enough, you don't need to wait. Just take the income whenever you want. Take it now. Take it tomorrow, whenever. Now let's talk about the 6-figure paycheck every year after you retire that's tax-free. There's 2 ways we can access tax-free money in retirement really easily. The first one you've heard of, and the second one might blow your mind like it did to me when I first learned about it. First, we use tax-advantaged retirement accounts to save and invest, specifically Roth 401ks and Roth IRA accounts. By the time that money hits the account, when you invest it, it's already taxed. It's been taxed once and for all. Then that money grows tax-free forever. And when you take it out in retirement, it's totally tax-free. It's done. Those are both amazing savings vehicles. And if I wasn't just a guy on the internet providing entertainment and definitely not giving any kind of financial advice, I would say you should absolutely be using these. They're good. The second way we can reach our money tax-free is to copy a strategy from some of the wealthiest people in the world. This kind of stuff is exactly why the rich get richer. They build a plan that lowers their income as much as possible. It reminds me of that quote by Warren Buffett where he was saying that he's paying less taxes than like his secretary. It's wild, but that's the truth. And the truth there is that income sucks. Yeah, you heard me right. Income is actually the worst because income is the kind of money that gets taxed the most. What we want is to access the money that we need to retire without it being labeled as income. Welcome to the magical world of capital gains. What are those? Specifically, long-term capital gains is just a fancy term for a category of money that comes to you through specific means. Fancy term, not hard to do. Yes, functionally in your life in this context, that money works the same as income. Like you get to buy things you want, you get to rent Porsches to drive for the weekend, all the fun stuff. But to the IRS, they're very different. Income is from a job that we all typically have like right now, and capital gains come from other sources like investments. The thing you need to know is that long-term capital gains are taxed way, way, way less than income. Enough for you to live off them and avoid taxes altogether, actually. And that's the key. So how do we transform our current nasty income into beautiful, luscious, delicious long-term capital gains that we don't get taxed on? In my opinion, the most ridiculously simple source is investing in the stock market via a taxable brokerage account. When we're talking about stock market investing, that's pretty straightforward. If you invest your money in a taxable brokerage account, you get the wonderful benefits of long-term capital gains without having the limits of those retirement accounts from before. The IRAs, 401ks, that kind of stuff. People don't talk about this much, but it's huge. So what is a taxable brokerage account? My wife just the other day was like, hey, I watched your video. And she said, I don't know what an NFT is, and I don't know what a taxable brokerage account is. So we're going to check off one of those boxes today. A taxable brokerage account is another fancy, confusing financial term that means something very basic. It's like the base model of an investing account. When you start investing with any company, you have to choose the type of account to invest with. It's just something that you pick when you set up your account, and this is the one that you can choose. This is an option. But the name is deceptive here because this whole time I've been talking about this idea of tax-free income, and yet this thing is literally called a taxable brokerage. What the heck, bro? Yes, technically you do get taxed on the money that you put into the account, so you don't get that tax break initially like with a 401k or a traditional IRA or things like that. And you get taxed on the gains that the account's investments produce for you. So on face value, this seems worse. Why would I pick this when I get taxed on the money I've made that goes in there, and I get taxed on the gains when it's coming out? Brendan, what are you talking about here? Hang on. Let's point that out again for the people in the back. You are taxed on the gains. So if you put in $10,000 and it grows to $11,000, how much are you taxed on? Just that last $1,000. That's right. Again, how can this work for us if that money is just getting taxed? Well, if we loop back to long-term capital gains, it comes full circle and we win because that money is working for you. It's producing gains. It's growing. But the government sees that output very differently than the kind of money you produce at your day job. See, if you're making $100,000 a year in your day job now as income, you get taxed at a rate somewhere around 8.6% based on the federal tax brackets. This is assuming that you just use the standard deduction and you're paying your taxes like a normal person. It's not terrible, but it's way more than with long-term capital gains. If you had money that was invested that made you $100K in profit and you were taking out all profit and nothing else, you get taxed $0 based on the long-term capital gains tax bracket. Isn't that insane? For 2022, the 0% tax bracket for long-term capital gains goes all the way up to $83,350 for a married couple filing jointly. So all the money you make, even inside this taxable brokerage account, costs you $0 in taxes up to that amount. So 100K, let's say you're taking out 100K, 100,000 minus 83,350 is 16,650. That's where you break into the next tax bracket above this. That money gets taxed. But even then, they won't because the standard deduction for married filing jointly is $25,900 for this year. So you could have actually made another $9,250 more without paying anything in taxes. That's a total of $109,250 in tax-free income. All this is saying the long-term capital gains tax rate, that first bracket is 0% up to that 83,350. And even if you made more than that, the standard deduction, being so big nowadays, takes you all the way out of the running for being taxed. It's incredible. Now, the math for someone in 2022 who is single still works. The long-term capital gains tax rate for that first bracket, which is 0%, is all the way up to $41,675. So if you're making that money from your investments, you can make all the way up to that much before you get taxed, plus the standard deduction amount of $12,950 for a total of $54,625 you could get from long-term capital gains. We're talking about investment income that's been in there for longer than a year that's totally tax-free. But even then, the long-term capital gains tax rate for the next chunk of income between $40K and $445,000 is only 15%. So if you wanted to still have $100K in investment income, that first $54,000 and change from before is 0%. Then the last $45,000 and change to get you to that $100,000 in income is only taxed at 15%. $43,375 times 15% is $6,800 in taxes for the year federally. That's a 6.8% tax rate, right? If you did that as a single filer because you're making $100K income as a single person, that would put you up into the 22% tax bracket, which means you would pay $14,768 in federal taxes. You made $100K and you paid 14.8% in taxes. This is why income sucks. That's over double the tax rate compared to making the same amount from long-term capital gains. Okay, so if a taxable brokerage account is so good, then should we just simplify our lives instead of dealing with and maxing out our retirement accounts? You got these limits to deal with. You've got age limits. You've got contribution limits. You have all these kind of hoops to jump through. Should we even deal with that? For some people, yes. If you know that you're retiring early and you need access to the money before you hit those government mandated ages of 59 and a half or 62 or whatever it's going to be to allow us to access that money without penalty, then it could be a really good option for you to just use a taxable brokerage. But this isn't investing or financial advice. If you know that you're not going to retire early in your 30s or 40s, and you're planning to need all that time into your 60s to actually save up enough money to retire, those retirement accounts are still pretty awesome because they do give you that tax break, either on the front end or on the back end. If you don't have access to a Roth 401k at work, does that mean that you should just save your money in cash because you can't invest it in some perfectly optimized way? Heck no. The point of this video is to show that you can have tons of tax-free money, even and especially with the literal simplest investing setup. So don't get caught up in the perfect account dance, worrying about exactly what you should do and what percentage here and what percentage there. You can do this. We're getting into some details here. So I have a section of concerns and caveats that might be on your mind that I want to acknowledge to get them out in the open. A first caveat here is the state you live in. Some states have literally zero income tax, and others, cough, California, cough, cough, have really high income taxes. Work out the finer details of your own location with your own CPA. Another concern could be NIT. If you're making enough money from your investments, you will get hit with this special tax rate of 3.8% called NIT. That's how I pronounce it. The real little acronym there is NIIT, which stands for Net Investment Income Tax. If you're single and you make over $200K from your investments, or you're married and you make over $250K, you'll get hit with that extra tax rate on the money that you make over those amounts. So if you have big plans and you're going to have $500K in tax-free income every year, or maybe in one particular year, it's going to require more work on the part of your CPA to make that happen. Another concern could be that this isn't financial advice and I'm just a guy on the internet. And I also could have done some math wrong here, or may not know all the details to your particular finances and your situation. So all those numbers could technically change for you. Take it all with a grain of salt and consult a tax professional. All right, now let's talk about how to maximize your investments so that you can maximize your income in retirement. The first principle is that time in the market, time investing beats timing the market. The longer your money has to grow, the crazier compound interest is. There's a video that I've linked in the description about how to catch up to your ever-increasing need for money in retirement that really goes over compound interest. And I've also linked a Terminology Tuesday video where I discuss only compound interest if you prefer something that's shorter in time-wise. The next principle is the more you invest now, the faster it will grow into something huge. A lot of people comment on my videos saying something like, hey, I'm investing $10 per month. I want to know how much that's going to grow in a few years' time, or in 10 years, or if I keep doing this for forever. Guys, you have to invest harder if you want to hit critical mass here. There's a common saying that the first 100K that you've got invested and saved is the hardest, and I completely agree. Below that level, it feels like your money is growing at a snail's pace. It takes forever. I kind of hated that stage. And most of what's happening in your account at that point is happening from your deposits, not from big stock market gains. But after you get past that level of 100K saved and invested, and you keep investing as much as you possibly can, you are going hard, then it really does feel like it picks up and it starts to move faster and you start to see bigger gains. And it may not actually do that like by the numbers, by a percentage, because that's not typically how math works. Like 10% growth is still 10% growth when you have more money in there. But psychologically, when the numbers start to get bigger and your account grows by 50K or 100K in a year instead of $500 or $1,000, it feels really, really great. The next principle is to grow your income to be able to invest more. I know a lot of times people talk about making more money because then we dream of buying nicer stuff. That means I could buy a house in Paradise Valley on the side of a mountain and drive a Porsche 911 GT3 Touring, and my life would be complete and I would be so happy. Like that's where our mind goes when we're talking about more income. But if instead we keep everything kind of the same, but you get a big fat boost in your income, that's all money that you can shovel into investments, which then activates kind of the first two. You can invest more, you can invest earlier, you can invest harder, and then that sets you up to ride that wave of compound interest and see that massive, massive growth. The next principle is to reduce expenses to be able to invest more. This one is tough for a lot of people because it feels like we're already living as cheaply as we want to live, and I feel you on that. But a lot of us also are wasting money. We're eating out a lot, we're buying nicer cars than we need, we're doing things that are just kind of throwing money down the drain because most stuff that we buy is depreciating almost instantaneously. Like if you buy electronics or a car or most things, it instantly drops in value by like 30% just because you bought it. Then after a year or two, it's down 50%. So all those things are just crushing your overall net worth growth, and they're not setting you up to invest more. If we can buy less, we've got more income left to then deploy to grow our investments. 3 more quick tips are to automate your deposits so you never miss one. Don't take out your investing money, because if you do that, then you stop the growth. I know a lot of people get scared. They want to take out their investments or they want to kind of take it out to spend and buy something cool. Don't do that. And third, have an emergency fund so you don't have to take out your investments. The goal is to put it in there, put in as much as possible, leave it there as long as possible, and let that stuff grow. It's like a tree. If you planted a tree and 4 years later chopped it down, it's not going to grow anymore. You've killed that thing.
Hey, you're here in a barn that I helped my parents build a few years ago, and to do that, I had to use really good tools. Toggle is a really good tool for investors who want to do a deeper level of research. It gives you the kind of firepower that they use on Wall Street. It's an incredible tool, unlike anything else I've ever used to research investments. And because you're a subscriber here on my channel, you'll get 1 month for free without having to put in your credit card info. Guys, that's really rare nowadays, to be able to try something out, see all the features, and not then get a subscription signed up without realizing it and get charged, and it's a big pain. That's not gonna happen here. You don't even need a credit card. When you sign up for that 1 month free trial, you'll also help out my channel because I'll get a kickback from them. And so I appreciate that a lot because it helps me to make more videos here for you. So go to the link in the description to sign up for Toggle today.
Hey, for fun, I like to have a secret comment section, and today the secret comment word is free. If you enjoyed the video or you learned something new about tax-free, awesome investing options, include the word free in your comment, and I'll keep an eye out for these because they are my favorite comments by far. Here's the deal. You investing at all is the most important thing. But to get started, we all have to choose a company to work with. Those companies are called investing brokerages. Again, these financial people love their fancy names. I think that there are some brokerage that are much better for beginners than others, so this video will show you some of the absolute worst ones and why you should make sure to avoid them.